These are the 5 conditions for you to take a trade using the BTMM strategy. And basically, you have to understand how they work for you to be able to identify them. But basically, number 1 is what we call the long-term trend, right? So you have to know whether the price is going up or going down for you to have your buyers, whether you're going to look for a sell trade or a buy trade. All right, that's condition number 1. Once you know that the price is going up, like in this case, we have a safety trade on USD card because our long-term trend is bullish or uptrend, and so we had a nice micro W formation here. Today is giving us a safety trade. You can see this was a very nice buy at this point here. So that's long-term trend. Condition number 2, you want also to look at when you're taking your trade, that price must be actually out of, on shorter time frame, that is 15 minutes. All right, price must be out of the Asian range or Asian consolidation for you to take a trade. You do not take a trade when the price is actually in this particular blue box, because there is no trade that you're going to find there. So you wait for the market makers to manipulate and then give you a structure that is clear for you to take a trade in line with the trend. The other thing, you want to find a clear double top or double bottom as a chart pattern that now signifies an entry. Now in this case, if you look at 1 hour, we have this nice W formation from here to here, all the way down, and then closes up. That's a complete W formation, micro W formation, right? Macro W formation. And then we have this small W formation from here to here, all the way up to here again, and closes up. That's a W formation, meaning that this is an entry now for a buy trade with a stop loss right below this low here. All right, and then you are going to ensure that when you're taking this trade, price is not within this particular range. So whenever you identify your W formation, price is already out of that particular Asian range. All right, now the other condition is actually what we call a 513 EMA crossover. All right, and that's another confirmation or confluence for you to take your trade. So when you're taking this trade, let's suppose you're taking it here, the 5 EMA, which is the red EMA that you're seeing on my chart, may not be visible on your end, but it must cross above the 13 or the green EMA. And if it's also trading above the 50 and the 200 EMA, it's now even much more stronger. It means the signal is much more stronger. So this is a good buy. You enter here with your stop loss right below the low of the day right here. All right, that is another condition for you to look for. And then condition number 5, and one of the most important things, is TDI confluence. A TDI confluence, you have to know how to use the TDI, and it's very, very important for you to get a good trade. Right now, TDI, you'll be looking for 3 things, and this is actually how you use TDI whenever you're trading with BTMM. Number 1, you're looking for a shark fin, right? A shark fin is anytime the price spikes out of the band, right? This is what we call a shark fin. Right, this is a shark fin, 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 right? This is a shark fin, this is a shark fin, right? This is a shark fin, this is a shark fin. So every time the price moves out of the band, right? Every time the price moves out of the band, that's a signal. Then the second thing is a double bottom, right? Preferable a double bottom, and you'll be able to identify it from here. You can see this is the first leg, price goes up, comes down, completes the second leg formation, which is right here. All right, I hope you can see this. So the price opened here, formed our first leg. You can be able to see actually also the same on the chart. This is our first leg, right? Price went up and then it came down, forming our second leg with a shark fin. All right, and here it is. So we get our second leg confirmation right here, and of course the second leg is also forming inside the band. So that forms now the second thing that you look for under TDI. The other thing is a divergence. A divergence is usually key for you to know whether the price has already been manipulated or not, because you'll realize that many times you get stop hunted and you don't understand why. So a divergence is anytime the chart is not saying the same thing with the TDI, right? It's not saying the same thing with the TDI. Let's try and identify one. I don't like this one. It's not a perfect one. It's not a perfect one. Let's just look for one. Okay, something like this now. So you can imagine this, right? So we have this from here to here. We can see price is almost not trending, right? It's almost not trending, right? So we have that touch and we have that touch. So now, but when we come to the TDI here, we have a clear direction, right? That the price is going up, right? The price is going up. So we start from here all the way from here. It means the price is going up. So now this means that buying here was a right decision, or it had enough confluence. That trade was enough. That trade had enough confluence. Like now we can look at GBP USD, what is it's been selling since morning, and you can see clear there was a divergence here, right? There was a divergence here. That is one. And then you can look on the TDI, it was saying we sell. So this here was our entry for short, right? Our entry for short, and the trade is currently running in profit. So those are the key conditions you look for when you're when you're looking for a trade using the BTMM strategy. I hope you've learned, and if you haven't understood or there's any question you want to ask, then feel free to reach out.